Hello, it's Adil, Mr. Intermarket Analysis, bringing you another review of the FTSE 100 going into the 24th of February 2014 for Monday's trading. Okay, so what do we have here then? Okay, so what do we have here? So basically, we have the FTSE chart. Okay, let's just say that this is on the verge of a breakout north. Okay, that's basically a conclusion that anyone would perceive or attempt to understand. Attempt to decipher here. Okay, just based purely on price action, given the movements in the markets, etc., with regards to emerging market concerns being alleviated or overlooked, shall we say, as opposed to alleviated. Okay, and with regards to the buy the dip mentality, obviously reigning supreme at present. Okay, so now with regards to the FTSE itself, concerns with regards to higher interest rates have been neutralised to a large extent, given the weak economic data that's come out in the last week with regards to employment. Okay, and also with regards to the tepid inflation numbers as well. So the sterling rally itself has certainly started to pause. Okay, so in a sense that is positive, obviously, for UK export sector, which essentially could be the catalyst to lift the FTSE 100 and propel it higher, given the fact that sterling will remain stagnant and not obviously exceed or break any key psychological level that in turn can obviously cause the FTSE to sell off. Now, with regards to US markets, they remain buoyant. Okay, with regards to the Nasdaq itself, it remains buoyant. The S&P 500, if you look at that and assess that on a weekly basis, it remains buoyant. So the only thing that one can conclude is that the FTSE itself is certainly on a projection or on a projected target to certainly go higher as well. Okay, now let's have a look at the Russell. Let's just quickly have a look at the Russell itself. The Russell itself on the weekly chart, obviously we are facing some resistance here. We have an unfilled gap that needs to close above. But having said that, with regards to the markets in general, I mean, one can just have a look at the semiconductors. Look how bullish that is. Okay, so semiconductors have broken out and made new highs. So that just generally tends to mean that the DAX or the European markets will generally tend to follow. Okay, so even though a lot of individuals out there are looking for the top, me included, I was certainly one of those. But I certainly have to revise my opinion now, to be honest. We're just based purely on price action. I mean, this certainly S&P 500 itself obviously sold off emerging market concerns, bounced beautifully off the trend line, and now obviously is now consolidating for a potential breakout north. If you look at the weekly chart itself, obviously we've held that key trend line and the market remains to hold that. As soon as we get a break above the 1850 level, then obviously off we go. Okay, and we certainly will be propelling and moving higher. What the catalyst will be, obviously we eagerly await that. Okay, I think the main catalyst, well, with regards to the US markets, will be tapering on hold. Okay, given the fact that you've had the poor weather in America, and obviously that again is affecting the economic data there. Even though the Fed remains on course to continue its tapering, regardless of the economic data that's coming in, it'll force its hand. Okay, the poor data will force its hand, and obviously as soon as you put a pause on tapering, it's a Goldilocks scenario. Okay, so in the fact that it's a win-win situation. If the markets will go higher based on expectations of more QE, the markets will go higher based on expectations of more solid economic growth. Okay, so it's in a Goldilocks scenario right now. That's one of the reasons why the market, obviously you can see this dip here on the S&P 500. A phenomenal move. I mean, I myself was in the bear camp expecting the markets to then, obviously given the fact that the markets were making higher highs, higher lows, we made a lower low for once. Okay, as opposed to a higher low. I was expecting a lower high, given the fact that you use your Fibonacci retracements. I was looking for the 61.75% to hold, even the 38% to hold, given the fact that we had emerging market concerns, China concerns, poor economic growth, as we all know. Okay, and obviously the end of liquidity, or i.e. QE. Okay, so and obviously interest rates rising, etc., etc. So that obviously hasn't been the case. The markets obviously exceeded the 75%, gone back to the double top, and now we're back into that neutral zone. Okay, so now the markets can break either side. Either it can move higher and continue its path or its ascent. Okay, or alternatively we reverse and go lower. So this week will be key. Okay, either way, I'm not a bull or a bear, but given the fact that the price action and obviously your gut instinct and you get a feel of the market and what the market wants to do right now, buy the dip mentality certainly is reigning supreme. And I wouldn't like to fight against that, especially given the fact that the Nasdaq has been so buoyant. The Nasdaq will be the key. So watch out for Nasdaq this week. Okay, obviously it's held a double top on the 60-minute chart there. Okay, it broke out the wedge beautifully. Obviously I caught the downside there. But having said that, the market itself, I mean, just based on the price action in Nasdaq here, you can certainly argue, okay, yes, we are in for a potential top because a double top is in. Now we're looking for a reversal and move lower. I'd like to hold my opinion on that. Okay, I like to sit back for a bit, observe the markets and see exactly what's happened. Yes, I'm aware that the Apple stock has hit gap fill. That's one of the reasons why the Nasdaq reversed. But again, there's nothing here in the price action, the daily chart, that tells me that this is due for a major reversal. If anything, it's consolidation and for a next move higher, especially given the fact that Mr. Zuckerberg has purchased Facebook, M&A, expectations of all other companies being bought out will keep them, will obviously remain well bid. So the Nasdaq certainly has a lot going for it, okay, in terms of innovation, in terms of growth, smartphones, tablets. Oh, we're yawning again. Okay, so yes, that certainly is looking bullish. Okay, so if Nasdaq is bullish, then one would have to assume and presume that other markets will remain buoyant and remain bullish as well. Okay, so going back to the FTSE itself, going back to the weekly chart, yes, we have got resistance. But how many times have we hit that resistance? I mean, I remember Nicholas Santiago at the Money Talks giving the parable of a door. If you hit a door once, obviously it shakes. Hit it twice, the hinges come loose, and the third time the door eventually falls down. Now we've hit this level once, twice, thrice, and obviously pre-credit crunch, etc., that was a level that we'd hit. We have spiked above that on a few occasions, and investors are certainly willing to buy the dip or willing to pay the premium because they're anticipating a new high. And given the fact that a lot of analysts out there are and do remain bullish on the FTSE itself, given the fact that the commodities, if you look at the commodities index itself, has been quite bullish as of late. If you look at oil, you look at the CRB, for example. I mean, look at that move there, exactly identical to the FTSE. This move here, from the 3rd of February onwards, exactly more or less identical to the FTSE, because the FTSE is a commodity index. Okay, so if you look at the 3rd of February onwards on your chart, if you go to our daily chart here, and that's basically where we started. So 3rd of February, a rally in the commodities CRB index, and obviously that led to a rally in the FTSE itself. And now obviously we're at a crossroads. Okay, so do we obviously start to sell off here? Okay, and does the market start to reverse, or do we continue to make new highs? That's the question that everybody wants answered. Okay, and hopefully we'll get the signal from Asia and see what the sentiment, obviously where it's been driven, and hopefully we'll be able to take our cue from there. Obviously look at risk FX, given the fact that the G20 over the weekend, it's been quite conciliatory and quite supportive of Mr. Abe's QE. Look to the USD JPY to dictate the move. If USD JPY starts to move higher, then everything else will follow, because that's the carry trade. Okay, so keep an eye on Euro JPY and USD JPY, and that'll give you a clue. Obviously the Aussie as well. The Aussie is at a very interesting, well, it has a very interesting formation. If you look at the Aussie, on a daily chart, you'll see that there's an inverted head and shoulders formation. So that in itself is already giving you a signal as to where the FTSE will go. So if the Aussie has an inverted head and shoulders formation, and its central bank certainly has stopped the rate cutting cycle, okay, and remains neutral to stroke bullish in terms of the economy, and in terms of obviously raising interest rates or rising interest rates, and given the fact that China, although it's in trouble, it's not as bad as everybody expected. Any good numbers out of China, any sort of uptick in China, given the fact that obviously it was New Year's and a lot of data was quite volatile, any type of stability or stabilization in China, and obviously emerging markets have stabilized to a large extent, provided there's no more problems there, then certainly expect the Aussie to start kicking in with regards to its inverted head and shoulders formation, which again helps Mr. Abe and his QE trade, or his shall we say Frankenstein trade, okay, with the yen getting debauched, and obviously the markets and obviously the carry trade supporting that as well. Okay, so or risk assets catching a bid. So these are all variables that you have to observe. Obviously the Nasdaq, the USD JPY, Euro JPY, which is quite important. Observe the Aussie, and obviously if the Euro itself starts to become strong, although obviously we are aware with regards to exports and the Eurozone is a concern. Obviously it could be European equity negative, but whether or not that has the impact of hitting the equity market, given the fact that the amount of Kool-Aid and excess liquidity and the carry trade that's in play. Again, a lot of variables involved here. Okay, so basically summation, weekly chart into resistance, but we've hit that resistance several times in the FTSE, therefore eventually we're going to crack through. So my gut instinct is we break and make new highs. Okay, again, it's very subjective. TA is a very subjective science, FA is a very subjective science, and as you know, folks, we have to go with the market. Okay, so if the market tells me Monday morning it wants to go lower, I'm more than happy to go lower. I don't have any preconceived judgment or bias. I'm happy either way. The market wants to go higher, I'll go higher. Okay, it doesn't really matter to me. I run two services. I run a live analysis service, which is day trading. I do fundamental analysis, which is swing trading. Everything is good. Okay, good, fantastic week last week. 300 points on both, more or less. Around 650 points, I think it was last week. So fantastic week last week. So I can't really complain. Okay, so let's have a look at the 60-minute chart now. Okay, so we have an expanding wedge. Okay, again, an expanding wedge, as we all know in TA, is not exactly a positive pattern. Okay, something to be concerned of, although it's in early stages. Okay, so given the fact that we've not had enough touches on the upside, I would be reluctant. Okay, reluctant to really follow through on that. Okay, so the only thing that we can actually possibly do is, obviously, we've broken out this pattern here. We had a failed bull flag. The market obviously made a new high. We're into horizontal resistance, so there's a key resistance zone up here. This is something that we'll keep an eye on. Oh, okay, so any break of so basically the rule here is break of 6860 or 6870. Okay, bull mode. Okay, below 6870, 6860, bear mode. Okay, so bearish, bullish, that's your line in the sand on the 60-minute chart. Okay, now let's go to a 10-minute chart. Okay, so 10-minute chart, what do we have here? So these are our levels. So previous resistance equals support. I always denote that with a different colored line, so I can have the ability to differentiate. Okay, and basically what we have here is this is your gap, although we've had a misprint here for some strange reason. Okay, so basically this is your gap. We haven't closed the gap as of yet, because the gap itself was around 6812. We do need to close that gap. I do expect that gap to be closed on obviously Monday first thing, given the fact that the markets are obviously gapping lower. So that gap there it remains. Okay, now with regards to TA, any potential trend lines, to be honest with you, the only one that I can fathom or attempt to write is this here. Obviously that's broken given the fact that the futures are around the 686010 level. Basically what we can conclude from here is that 6808 and 6810, okay, is key and pivotal support. Okay, if once that breaks, then the next level is going to be a 200 MA, and then obviously then we start to look for any other potential support and resistance lines. So you've got support, resistance around here, support, resistance around here, previous resistance equals support here. So these are all levels, so watch out for the levels below. So you have 200 MA will be key support, 6780 or 6790, so we say 6760, then 6750, and then obviously 6730. So again, it's all we'll see exactly how the market's trading, and obviously intermarket analysis plays a very important role here as well. Okay, now let's have a look at its pace. FTSE 250 is one I always tend to observe and keep an eye out for. Now this is the a conundrum. Okay, not a conundrum, basically it's an early warning signal stating or telling you that the FTSE itself is going to break higher. Why? Because the FTSE 250 has broken higher. Okay, so the FTSE 250 has certainly cleared its previous resistance, given the fact that it had, given the fact the last dip was being bought on every occasion. We had bottoming tails and off we went to the races, and we've had a clear breakout and we've had a sustained breakout. It's not been a fake out. So given the fact that the FTSE 250 is obviously the small caps generally tend to be the first to start to grow because they're very sensitive to growth. That means that the large caps are going to follow. Okay, hence the reason why my bias is obviously for a breakout of the FTSE to the higher side. Okay, so hence the reason why I'm a bull with regards to FTSE going into this week. Provided, like I said, provided there's no curveballs such as emerging market concerns, such as any European concerns, such as any US concerns regards to tapering, etc., etc. These are all factors that we certainly have to consider going forward. Okay, so okay, folks. So I think that wraps it up with regards to the FTSE itself. Okay, so certainly go look at the levels going into next week. Obviously, the key level again, going back to the 10-minute chart, will be the 6810 and 680. We'll call it 6810. Okay, call that in the line in the sand. So provided the FTSE remains above 6810, We continue to make new highs. We test 6860, 6870, potentially make new highs. If you break below 6810, then that support level at 6790 beckons, and it opens up the level for 6750, 6740, 6730, and then obviously we'll trade accordingly and see exactly where this FTSE wants to go. Obviously, if this channel breaks, then certainly we'll come back and retest the 6750 level, and then we'll see whether or not we can use that as a projection board to obviously for prices to go much higher. Okay, so risk on, risk off is my motto, and wax on, wax off is the way in which the markets work, like Mr. Miyagi once said. Risk on, risk off, wax on, wax off. Goodbye now.